Today we are going to take a look at the dollar index, GBP USD, NZD the S&P 500, and the German 30 index. So this will be a midweek market update. Also, we're going to look at some fundamental data that just got released and talk about that as well for the dollar index. Now, if you are new here, the sub would be appreciated, as I provide valuable educational content on a daily basis. If you do not want to miss out on any of the content, just turn on that notification bell and smash that like button for the YouTube algorithm, and also for us to reach more people out there as well. Now, we're going to start with this article we got here quickly from CNBC. It got released today, if I'm correct. No, actually yesterday. It says here the Federal Reserve GDP tracker shows the economy could be on the brink of a recession. Now, the GDP tracker is obviously something that they use to kind of forecast or predict, more or less where the economy is going. We can see at the start of quarter one, it's down minus 1.5%, and you can see how the GDP sank in the Q1. Headlights over here, it's the Atlanta Federal Reserve GDP tracker is now pointing to an annualized gain of 0.9% for the second quarter, down from an estimated 1.3% increase less than a week ago. So they firstly anticipated a 1.3% increase. However, that is now less likely to happen there as well. It also says here with the first quarter growth down 1.5%. Also, if you look at the US GDP, has been doing quite well for the latter part of 2020 up until quarter 4 of 2021. Then in quarter 22 it started very bad. Q2 is now forecasting to be even lower than that. It was forecast to be 1.3. It's now sitting and looking at 0.9%. So it's not even 1%. It says here that the National Bureau of Economic Research says the recession can include 2 straight negative GDP prints, but not necessarily the case. So before you start dancing to the music, one positive effect of a recession is that it keeps inflation down. So just because the US could be heading into a recession, the biggest challenge that the US currently have is, their CPI numbers is quite high, so inflation is quite high. If they do go into a recession, it would then potentially it would potentially positively impact the dollar index, because it will bring the inflation down, and that's kind of what Powell want to do. He's been saying that our goal is to bring inflation down. So I've been speaking about this for quite some time now. So if you've not watched that video that I did on the US recession as well, and I said they could potentially head into a recession, but it's not a bad thing, because this is going to help the dollar index at the end of the day. So the main question is, does the dollar get stronger? The dollar continues to rise because the demand will always be there for the dollar. So I'm not going to do a full breakdown on the dollar index. However, I'm just going to continue where I left off on Sunday. So this was the breakdown that I did, and the market was sitting in there, and you can see that is exactly what the market has done. Now, I'm not saying I'm an insider trader, but there's a lot of opportunity to make money in the market, and if you follow the content that I provide, you shouldn't have any problem to be able to not make any money. But it's time for a update now. So we're just going to jump here from the daily time frame. Now, we're obviously still waiting that the CPI data that's coming out in 2 days, and we can see the dollar index printed this candle with this long wick. You normally expect the market to go and fill in that wick. So based from what the indicators in my eyes are saying is that the dollar index is going to go and hit that level over there. This level here acted as a strong level of support, broke below that, came to test it as resistance, had that massive wick. We can expect the dollar index to fill in that wick, and then we have a level of resistance over here that is being broken very aggressively now. You can expect the market to pull back, test that level as support there as well, and then from there we can continue this okay, this continuation to the upside. The Federal Reserve is expected to raise interest rate by 0.5 basis point. That is expected to happen on the 13th of this month, also there as well. Now GBP/USD from the daily time frame is this market had not broken out of this consolidation phase. Once again, like I said, the market is waiting for the CPI data. However, the market had given us this head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Now, what I would like to say is this is a structural level that the market had created over here. The market did not only consolidate here, it also had resistance, then support. The market printed new resistance, broke above that support, did not hold, broke below support, came to test it as resistance multiple times. So we have this market moving sideways. The good thing that we can see over here is we've got about a 30% candle to wick ratio over here, and we can expect this candle to fill in that wick. It would be very beautiful for us to just get this daily candle to close below this level, and then boom, excuse me, and that would be a good way for us to just ride this wave to the downside. Next up, we've got AUD/USD. Now AUD/USD is also printing similar price action over here. Now the structure I would like to see is this daily close. Excuse me, it would be good for us to see this market close right below this structure, and then again you'll see how all of this plays out. In doing so, the market would then complete that information there at the neckline, because we know we will have this equal low. We'll have that as a neckline, and we can expect the market to print that information, retest the neckline, and then continue lower, which is probably the most easiest thing in the world to do, right? Very easy. Next up, we've got the NZD/USD. NZD/USD also, I spoke about this information, and if you can read the price action here, it's very simple. We have this level over here, resistance, we got support, then held. The market broke above that, came to test it, creating an equal low almost over there, didn't hold. Basically, we can expect this pullback and then that continuation to the downside. Now once again, this can happen at any time, but I've spoken about all of this on Sunday already, so you should be in this trades already, but this is just for the people who were watching Siemenland and all of that, who didn't feel the need to watch the video on Sunday. So you have an opportunity to get in once again. Next up, we've got the S&P 500 here as well. Now the S&P 500 showing similar price action to the Nasdaq 100, also awaiting those CPI numbers. This market also hasn't been moving since I've spoken about this. Once again, you can expect this market to continue this consolidation, and then potentially, depending on the CPI data, if the CPI comes through high, expect that breakout and that continuation to the downside there once again as well. Next up, we've got the GER30 index on the daily time frame. Now I've spoken about this market, and I've spoken about this massive impulse correction and impulse pattern. This market is also now approaching support, and there is once again very good possibility that the market could probably slightly pull back and then start that continuation to the upside. The market could even start that continuation to the upside there as well. All you need to do is apply the rules of the strategy that you trade and find a good entry in the market there as well. Bullish, indecisive, bearish, bullish. That's it. That's all from my side. Thank you for your time. If you enjoyed the video, smash the like button. And even if you enjoyed the video, you can share the video with your friends there as well, because each one helps one, and the only time you look down on someone else is when you're trying to help them up. Thank you for your time, and as always, cheers for years.